The broadcast is now starting. All attendees are in listen-only mode.
I was ahead of you. Let's call to order the January 6, 2026 North Carolina Capital Facilities Finance Agency meeting. Thank you, everyone, for being here. I appreciate it, and looking forward to a good meeting. Why don't we begin by calling the roll? Cindy.
I shall. I'm Cindy Aiken, Assistant General Counsel. Auditor Bolick is absent today, and we have Ms. Arnold. Just test your mic one more time.
Here we go.
Yeah, there she is.
Good afternoon.
All right. Ms. Arnold present on virtual. Ms. Parker? Present. Present in person. Mr. Bowen?
Here virtually.
Thank you, sir. Mr. Bowers?
Here virtually.
Thank you. Mr. McLaughlin? He's here.
Here virtually.
There you are. Thank you. And Treasurer Briner
Here.
present in the room. Just one absent. We have a quorum. The members of staff present at this time: Jennifer Wimmer, who is Secretary Treasurer of the Capital Facilities Finance Agency; Denise Canada, our LGC Secretary; myself, and we have assorted staff present, our AV pros, Lindy, MJ, and Michael Wagner. Today's meeting procedures are the same as prior. The meeting is being recorded and will be made available pursuant to the department's recording of public meetings policy. We would remind everyone to please identify yourself when you're speaking. If those who are participating virtually, please mute yourself if you are not speaking. The agenda for today is posted on our website at the agency page at www.nctreasurer.gov. If we have any changes, we will announce those during the meeting. As prior agreement, unless there's any objection, we will take votes by roll call, and the motions and the seconds will be considered as a yes vote. I will skip you unless you want to indicate otherwise during the actual vote. And I will remind myself to try not to make too much noise with my papers, as the microphones are really sensitive in the ceiling. Thank you.
Thank you, Cindy. So we are joined today by Dave Machado, Lisa Medina, and then Brian Kelso virtually as well, who will give us some information for our discussion later. So welcome. Thank you for being here. With that, let's do the Pledge of Allegiance and the salute to the North Carolina flag, if everyone will join me in those. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. I salute the flag of North Carolina and pledge to the Old North State love, loyalty, and faith. Okay, thank you, everybody. Conflict of interest statement. Please take a moment to review the agenda. Agency members are reminded of your duty to avoid conflicts of interest. Does any member have an actual or potential conflict of interest with respect to any matter on the agenda? Okay, hearing none, let's move to the December 2nd, 2025 minutes, which were distributed some time ago. Are there any discussions or questions, or do I have a motion to approve?
So moved.
Mr. McLaughlin?
Yes.
All right, thank you. Is there a second?
Second.
Thank you. Ms. Parker, I'll call the roll, please.
Okay, for the December minutes, McLaughlin and Parker. Ms. Arnold?
Aye.
Thank you. Mr. Bowen?
Aye.
Thank you. Mr. Bowers?
Approved.
Thank you. And Treasurer Briner?
Aye.
Thank you very much. That motion carries.
Thank you. So on to the one agenda item requiring a vote today, and that is the Woodlawn School. I'll turn it over to Jennifer to explain.
Thank you. Good afternoon, everyone. We have one item for approval. It is for the Woodlawn School. It is $6 million, and they are building a new building 10,243 square feet. It's a two-story building. It's going to have the capacity for additional students, having 8 classrooms, including science labs, 2 classrooms that could be joined for a larger group setting, podcast studios, offices for faculty, and in addition, the infrastructure upgrades, not only for this building, but for future expansions to the campus in regards to the well and septic systems. The current enrollment of Woodlawn School is 258 students. This building construction is adding this one building to their current 11 buildings on campus. They have a campus area of 61 acres. And this is phase 1, so the infrastructure upgrades would also look towards having other buildings in the future be built based on need. Their long-term goal is to have a capacity of around 400 students. They currently have 9 buildings on the 61 acres, so this would be number 10. This is a bank placement going to be held by First Citizens Bank and Trust Company with an interest rate of 4.83%. The school itself has been doing a capital campaign, and you'll notice that there's 42 months interest only with principal and interest thereafter, and that has allowed the school to make payments based on the collection of the pledges that their capital campaign is already underway with. They are refunding an existing United Community Bank loan, which is included in your sources and uses. And if you have any questions, there was one additional question that had come up, and it in the school's resolution, they are acknowledging not only the necessity for this particular new construction, but also their intention of having funds available for maintenance, repair, and operations of all of the school buildings and future construction. Again, if you have any questions, I am here, as well as all parties of not only the school, but their financial advisor and counsel are on the line.
This is Vinnie Bowers.
Go ahead.
I do have a couple of questions.
Go ahead, Mr. Bowers.
Basically, in the past, the schools operated at a break-even basis, with 90% of their revenue going towards salaries and operation, and 10% of their revenues covered by annual contributions, roughly. The school is a good school, average SAT of 1270. All their students go on to 4-year colleges. The only concern I have is when I look at 42 months interest and I look at the fact that they currently don't have an endowment, and they don't have very many long-term investment income, I get worried when I look at pledges of $2,200,000 and you're borrowing $6 million. I'm used to seeing borrowing less than pledges, not that much more than pledges. So I'd really like to hear a lot of discussion about the plan of repayment. Obviously, it's got to be coming from. I was glad to hear about the student growth, the provision for that, but I'd like to hear a lot about the plan of repayment and the comfort, because 4 times earnings is about $1.6 million, and they've never had net income like that.
If I may add a question as well, along those same lines. I noticed that slightly less than what is pledged has actually been collected. So I'd like to understand what the backup plan there is as well.
Sure. I have background information, but Holly Honeycutt, the head of schools, could most directly answer that. She is on the line, and she could talk about the collections of those pledges, as well as Mr. Bauer's questions on what the Plan B is.
And Holly, this is Robert Hobson at First Try, and I'm happy to take a first cut at that. We're the financial advisor to Woodlawn. And then Holly, certainly you can chime in.
Sure. Go ahead, Robert. Thank you.
Great. And hey, Benny Bowers, it's been a while, but hope you're doing well. Let's rewind a little bit. And this goes back till, I believe, summer or so of last year when we were first engaged by the Woodlawn School. The first thing that we did, as we often do, was to build a capital planning / borrowing feasibility model for the school that has things in there like current enrollment and projected enrollment that we've shared with the agency. It's obviously got the current tuition and fees that are escalated as they typically would be. And doing all that, just to be clear, part of this loan is to pay off an existing loan. So they've been carrying the freight on that loan for quite a while now with UCB. But we modeled out for the next 10 or 15 years or so the feasibility of this project. I don't know if we have the capacity in this type of medium here, but we've got that model. It was sent around to banks as we were soliciting loans. We ended up getting 3 loan proposals, First Citizens being the one which was the most advantageous to the school. So Benny, to answer your question, with enrollment growth, with tuition growth, and the fact that part of this loan, which is the refinancing part, is already, been accounted for in history, that we feel like the feasibility is here comfortably above the coverage ratio. And I think the proof's somewhat in the pudding there with the fact that we had 3, stand-up lending institutions that were willing to provide this $6 million loan. To answer Ms. Arnold's second question, you're exactly right. And we've got the various facts and figures here. I'm not sure if Ms. Wimber has shared those with you, but on the capital campaign, a good bit is in hand already. And then the rest of it, as it currently stands, is scheduled to come in over the next 3 to 4 years, hence the 36 months interest-only period where there's a covenant in the loan documents where any future, or I shouldn't say any, as future capital campaign dollars are actually realized, received by the school, they must be used to pay down the loan. And then anything in the future after we close the loan that is raised from a capital campaign basis, not, and I'll let Holly update you all on the status of the campaign, but any future dollars as well during that 42-month period also will be used to pay down the loan. So, and then Holly, correct me if I'm wrong, the silent phase to the capital campaign is just about wrapping up, and that will lead to the next phase, which I believe y'all are calling the community phase, kind of the more widespread solicitation. So let me stop there, Holly, if there was anything to add from your perspective.
No, that is correct, Robert. We are in the tailness of our Quiet Capital campaign. We've raised an additional $260+ plus thousand just in the past month, and continuing with some of our major 1, major 2 donors that we still have out there, then we are looking to transition to a community campaign and invite our entire community to be part of giving to this special project.
Again, Benny Bowers, where does your capital campaign stand today? How much have you got pledged?
$2,238,407 in pledges.
Pledged. And as it was hard to find your campaign. It's in that silent page, but I did see something saying it was hoped for $8 million. Is that correct?
Say that again. I'm sorry.
I saw something on the internet trying to find out about your capital campaign that said it was for $8 million. Is that correct?
No, sir. I'm not sure where that came from.
I don't know either. Just something on the internet. Okay. Okay. So what is the size of the capital campaign?
Right now, we're looking, the goal is to raise $3.5 million.
Okay. Just as in the goodwill thing, I would like the agenda to show that the interest rate is 4.83% for 10 years, and that the term is 20 years with a tender put option at the end of 10 years. Is that correct?
Yes, that's what it shows.
That is, yeah, that's correct.
I'd like to see that in the agenda, just like we did for goodwill, so that a layman might understand the transaction a little better. And the last question that I have is, you're on a historic campus, but it's not a historic district, I don't think. But I was a little worried. Is there a phase 1 study being completed or being done? Phase 1 environmental.
Benny, this is Robert Hobson. Yes, that was part of First Citizens' due diligence, among other items. It was, I'm struggling to remember if y'all had a recent one that we were able to provide and they just looked at that. But in any event, there's no environmental issues per the due diligence that has been done on this, as would be standard by a bank like First Citizens.
That is correct, Robert. Yes, we have complied with all of those requests and have all of those permits and passes in hand.
Okay, that's helpful. What would your revenue look like when you reached, I forgot the student goal that you have, 400 students?
Well, obviously, that's going to depend obviously on what tuition is at that time. That's difficult to, at this point, right, read into the future of what that will be. What I can tell the board is that we are seeing steady, intentional, purposeful growth. We have waiting list currently as well, which is another need why we need these facilities to be able to provide students the opportunity to attend a project-based learning school.
It is important to me that this be a deal that is done by the bank and begins and ends with the bank if a problem should arise. And, only because of the nature of forthcoming students and monies.
Absolutely, and First Citizens has obviously been involved throughout the RFP process, and then obviously the diligence process over the last several months. So point well taken.
Ms. Parker?
Thank you, Betty Parker. I have a few clarifying questions for the school team. Is the 400 student target expected to be realized with the capacity from this one building?
We do know that we can house probably an additional 100 to 150 students, so it gets us very close to that full capacity.
Right. So is that a target more associated with that 11th building?
Yes, ma'am, potentially.
Okay. So with the additional enrollment from this building, can you sort of ballpark the percentage increase in tuition payments over your current? I'm trying to aim towards at least an overview of the revenue increase that this building will provide.
That would probably be something on our capital planning model. Robert, if that's possible to share.
Yeah, or Will might have that. Let me make sure we understand the question correctly. I think the question was basically, what are the projected annual increases in tuition rates?
Generally, my thought was if you currently have 258 students and you're going to add another 100, are you expecting about a 35% increase in tuition payments with this building? And please check my math, but I'm trying to understand the revenue increase attributable to this build.
Yeah, it would be linear. Will Cuthbertson, who works at First Ryan, do you have the assumptions on tuition increases at your fingertips there?
Yes, I do. So over each of the next 5 years, we're assuming 5% tuition increases. We're also assuming right now, as Jennifer mentioned, we got 258 students. At the end of the 5-year period, we're projecting about 295 students. So, I mean, I can calculate the percentage that generates over the next 4 or 5 years. Give me 1 second.
So that would be about a 20% increase. Okay. Good. And I did have a follow-up question. Thank you very much. I did have a follow-up question about pledges. Is it possible or likely that some of these pledges may be multi-year pledges to where they're stretched out merely for tax benefit to the donors?
Holly, I believe that is the case as we commonly see, but I know you have been spearheading a lot of those efforts, but I think that's exactly correct.
That is correct. Most of our pledges are within the 3 to 5 year window.
Understood. Thank you very much.
Thank you.
I have 2 additional questions for the school team. Is the building 11 scheduled to come online within 5 years? Is that the window?
The building's scheduled to come online next year.
Next year.
Yes, ma'am.
And then what is your current operating budget?
Our current operating budget is a little over $5 million right now.
Thank you.
And folks might wonder, how can they put this building online so quickly? It's actually a very efficient, I hate to use the word simple because it's going to be a great addition, but it's not some elaborate, complicated build. If you see a rendering, it frankly looks much like a cottage, which is in keeping with the current buildings on the campus. So that's why it's pretty efficient construction as far as cost as well as timeline.
Does it require a certificate of compliance for the Historic Resource Commission, which I'm not sure it falls under?
Holly, to my knowledge, does not require such a certificate, historically speaking.
No.
From the historic, yeah.
Correct, no.
And just to follow up with the permitting, which leads to my last comment, we and the school has already received the permits from Iredell County as well as the town on building permits. The last permitting is from DEQ. They have been in discussions with DEQ. There is a lag in that time, but First Citizens and this commission's approval, if you so choose to move that way, the closing cannot occur until that DEQ permit is received by the school and by LGC staff to make sure that all the permits are in hand.
I had a quick clarifying question potentially for Robert. The expense reimbursement line item here, are those issuance-related expenses or are those construction-related expenses?
What is these, what is this, I'm not sure if you're looking at a specific sheet. What is the line item you're referring to?
On our sources and uses list, the expense reimbursement under uses is $349,757. We have two line items above it, which are taxable and tax exempt costs of issuance. I just want to make sure the expense reimbursements are not incremental costs of issuance. They're in fact construction-related expense reimbursements.
Exactly. Those are architects, engineers, et cetera, fees incurred to date.
Great, thank you. Any other questions?
Betty Parker, I have one last question. On the project contingency line, is that the owner's contingency?
Correct. That's there's a GMP contract, and that would be contingency to cover any change orders that add to that guaranteed max price, which inevitably there will typically be some, but once again, going back to my comment earlier about kind of the relatively straightforward build here, we don't expect, we being the Woodlawn and its various professionals, engineering, architects, et cetera, don't expect any material needed change orders.
Understood. Is there also a CM contingency in the GMP in addition to the owner's
Not
contingency?
to my knowledge, no. And Matt, I'm not sure if one of the legal representatives on the call can answer that question off the top of their head.
Hey, Robert, Matt's on. Not to my knowledge. We can take a look.
Thank you.
Any other questions from committee members?
Yes, this is Marcus. I just had a question about the enrollment demand and just what it is currently. And then I think you talked about this a little bit about the increasing enrollment projections, but just any additional color on like the, admissions rates now and, how hard it is to get into school and what makes them think that they can meet the enrollment growth projections.
Sure, I'll speak to that. On our feasibility capital planning model, we intentionally a very thoughtful growth pattern of simply 10 students a year, which, as you can tell, we only projected 255 this year. We're at 258 heads and seats, 267 paid currently. So we are above our projections for this year. We also have weight pools in multiple grade levels at this point as well. So we feel very strongly and confident that we'll be able to meet and more than likely exceed the projection enrollment on our feasibility capital planning models over the next 5 to 10 years.
Makes sense. Charlotte is no shortage of newcomers. So
very true.
Well, again, as best I can look at numbers, there may be coverage, but it won't be 4 times by any means.
Okay. Any other questions, comments from members?
Could you just clarify, please, the approximate square footage of the new academic center?
10,243 square feet, which is a 2-story building, which has 8 classrooms, studio, and offices.
Thank you.
Okay, if there are no further questions, I'd entertain a motion to, any motion to approve or not the Woodlawn School financing.
Contingent on them getting them.
Contingent on getting the DEQ permits, of course.
Motion to approve staff's recommendation for the funding. McLaughlin.
Is there a second?
Second.
Parker? Please call the roll.
Okay, so for Woodlawn, the financing to, motion to approve contingent upon the bank and the agency receiving the DEQ permit. Also, I want to just real quick, sorry, I'm just say one thing real quick to all the members, and Ms. Parker, you're being new, that the findings are the no discrimination clause, public utilities are available, the borrowers financially responsible and capable of fulfilling their obligations, and adequate provision is made for payment of principal, interest, maintenance, et cetera, on their project. Just thank you, keeping that in mind. Okay, back to this. McLaughlin Parker with the contingency. Ms. Arnold. Oh, is your mic on, off? Okay. Try again.
Approved. Aye.
Okay, thank you. Thank you. Mr. Bowen.
Approve. Aye.
Thank you. Mr. Bowers.
Approve.
Thank you, sir. And Treasurer Briner.
Aye.
Okay, thank you. That motion carries.
Thank you. Appreciate it. Okay. So we're going to move over to a discussion item. As you'll recall, earlier in the year, and it's really led to today's discussion and other discussions, we changed policy for CFFA to allow for statute longer amortization than we've allowed per policy historically. As part of that discussion, we talked about a number of issuers under the purview of CFFA who were issuing through Wisconsin, avoiding the oversight of this committee and getting their issuance done anyway. So one of the reasons that we looked at amortization was so that we'd have better oversight and move the market to what it was. The other topic that comes up routinely among issuers under the purview of CFFA is rating. And it is very challenging for many of our issuers to get an investment grade rating, in part because revenue usually comes from one source, particularly it comes from the state. So as a credit underwriting matter, when you have a single source of revenue, it's tough to believe that someone's investment grade. And so we see a number of non-investment grade issuances just below investment grade, double B, as an example, going through Wisconsin today. So these schools are finding financing at a higher rate outside of our state without our ability to look through their financings. The question in front of us, and we're going to hear from some folks who have a front row seat on these matters, is whether we should allow issuance of below investment grade to certain buyers of that type of issuance, highly sophisticated institutions, in the future. We have not done so historically. And so we wanted to have a discussion around that, unpack it, take people's questions, think about it for at least a month, and see if we want to make a policy change, because inevitably we will have issuers who are, again, going to go to Wisconsin anyway, but may come through this commission instead, which I think would be better for our state. So that's my overview. Why don't I hand it to you, Jennifer?
Sure. We are very happy to have, as Treasurer Briner mentioned, several different perspectives of specifically charter schools and the financing community. And so the first speaker we have is Dave Machado, and he's the Executive Director of the North Carolina Coalition of Charter Schools. And he will be speaking on behalf of the charter schools and their needs. So I will ask him to come up if you would. And
Thank you for being here.
Thank you. Again, my name is Dave Machado. I'm the Executive Director for the North Carolina Coalition for Charter Schools. I've been in the charter school movement probably close to 30 years now as a school director. I went to work for Department of Public Instruction as a director of the Office of Charter School. I was there for 6 years. Then I went to work for a charter school management company, and now I'm in my current role almost a year now. I want to talk to you a little bit about the charter school community, give you a little background, and happy to answer any questions that you might have. As you probably well aware of, the charter school movement is almost 30 years old. We have over 150,000 students attending 211 charter schools across the state. 10% of all public school students attend a public charter school. If we were a district or what we call an LEA by just ourselves, we'd probably be the fourth or fifth largest district in the state. 67% of all charter schools have been in existence for 10 years or more. This is very significant for the discussion that we're having today because many of these charter schools have a demand for enrollment, and they're going to have to increase their facilities to meet that demand. A lot of these schools are wanting to renovate older buildings that they've been in for quite some time, or they'd like to get out of a lease situation and get into a purchase situation so they can better budget forecasting. Charter schools are funded by state and local funds. The money does follow the child. Whatever the state would pay, we'll say Wake County for a student, if they went to a charter school, that money would follow them. Local funds from the county commissioners follows that child also. But charter schools receive no capital or facility funds at all and receive a very small portion of the North Carolina Educational Lottery funds. So you can see charter schools have to fund their facilities through their regular operating budget, which is extremely difficult. If you factored that into what a traditional public school receives and what a charter school receives, it's about 75 cents on a dollar if you factor in the expenses. A rule of thumb for charter school budgeting is that they should spend no more than 15% of revenue on their facilities. And that's becoming more and more difficult with the increased construction costs and the high interest rates that we're facing right now. When I was a charter school leader, I think around 205 or 6, we did a building project per square foot was $95 a square foot. Our second project 2 years later was 105, and we went nuts. We went crazy. We can't afford it. Right now, I'm familiar with the charter school in Holly Springs area. They completed a project about 4 years ago, and it was $250 a square foot. And right now, they're doing their fourth project, and it's $300 a square foot. So you can see how expensive it's become to build buildings. And a little side note, I think the last Wake County traditional public school that was built was about $500 a square foot. So you can see charter schools really try to be efficient in their cost. So a charter school, again, rule of thumb is 15% of revenue on facilities. Rule of thumb is 65% of revenue on staffing costs. So you can see that does not leave a lot of money for other costs such as classroom supplies, transportation costs, extracurricular costs, and any other educational costs you might have. So anything a charter school can do to lower their fixed cost will result in a direct increased funding to educate the students that they enroll in a school, and that's exactly why charter schools exist. So that's a little update on the charter school community. Happy to answer any questions that you might have.
Okay. Our next presenter is Lisa Williams, and she's a.
Let me just stay there.
Yeah.
Okay. No, you come on up. Yeah, we have plenty of seats.
Thank you.
There might be questions that
right.
people have. Our next presenter is Lisa Williams, and she's a partner with McGuire Woods. And she is going to speak on the legal background of charter schools and answer any questions.
Thank you so much, Jennifer. Yes, I'm Lisa Medina Williams. I have been a bond attorney for the last 23 years, working with municipal issuers and also conduit issuers for my entire career. I've worked in the state of North Carolina for the last 10, and before that, the state of Virginia. And so I have a lot of experience with investment grade, non-investment grade, large issuers, small issuers, conduit issuers of all sizes. I've worked with a number of the national issuers. So yes, I'm here to talk more on the legal side and just give some foundational reminders. And while we are here talking about charter schools, it's important to realize that charter schools are sort of the topic of conversation because that's one of our frequent borrowers that come to the agency. But the agency has a broader authority under its act. And while we are looking and having a discussion regarding change, something very important I would like to note is, Cindy, after that last item on the board, went through and did a reminder, which I thought was fantastic, about the criteria for which the agency is required to find. And by no means is anything that we're discussing here changing that. So it's important to remember, yes, you still have, despite what changes may or may not occur policy-wise. We're not changing the statute. We're not changing, you have to find that they are financially responsible, that they can pay their debt service. They're not discriminating. And so I think that's an important reminder to level set this discussion. Also, your act also provides that by no means are any of the bonds a responsibility of the state of North Carolina. They are not a state, the agency is not on the hook for these bonds because you are a conduit issuer. And as a conduit issuer, whether it's a bank deal or a public issuance, all of the documentation that I have the pleasure of drafting clearly states to the investor, to the buyer, to anybody who reads the paper that the agency or any other conduit issuer, because this applies to all conduit issuers, that you are not financially responsible. And so by way of the industry is concerned, there's a great understanding there. And the documents, even though there's that great understanding, the official statement, the bond, the indenture, loan agreement, all of these documents, probably a good 10 times through the whole transcript, will make those statements. And while, yes, for the past 10 years, so PFA, Public Finance Authority, was sort of the first national issuer on the scene. They were established in 2015, and they have been a common issuer, not just for North Carolina, but North Carolina has used them quite a bit, but other states as well, for various reasons. There are some other national issuers that are also used. There's one in New Hampshire, there's one in Arizona, and they've got broad authority from their own states on who they can issue on behalf of. Although, and again, with these changes, we're not saying that all of a sudden all of these deals are going to be taken away from PFA or Zeta or the national. There's still going to be some deals that will still make sense to go to those national issuers. But it's important to keep in mind that, Dave was talking about sort of the economics of charter schools and how their revenues and expenses work. Going through PFA and these other national issuers, how they come into existence is they charge large fees. And these large fees are an annual fee that come out of the school's budget. And so that's a fee that they're constantly paying. And that fee can easily pay for teacher tuition, annual salaries. So that's one thing to keep in mind. And I think there's, Brian, who will speak right after me, can speak to this as well. I think there's a little bit of, and this is not from an agent, I'm not speaking as to the agency, I think in general, even though a borrower goes to a national issuer, it doesn't keep the state of North Carolina, the state of Virginia, state of Florida, California's name out of the conversation. Because unfortunately, if there's ever a headline, the headline's going to be about where is the borrower from. So it's important, yes, we want to make sure our borrowers that go through the agency, obviously financially responsible, can pay their debt service. Unfortunately, there's no perfect keeping North Carolina's name out of any. But we haven't had a distress situation in a very long time. We like to keep it that way. Also, there are lots of, as I was mentioning, lots of disclosures about the responsibilities of conduit issuers in the documents. But also, the SEC, the IRS also have written papers on the responsibility of conduit issuers, and it's about finding an eligible project by way of the Internal Revenue Code and what's eligible, and your state law. It's a two-pronged, federal law and state law. An eligible borrower, an eligible project. The public approval process, giving your communities an opportunity to be heard about whether this project is one that they want in their community. That's another one. Information reporting with the IRS. That's part of the conduit issuer's responsibilities. Record retention. But it is important to note that as an industry and by the various federal agencies, your diligence into the borrower is not an expectation from a federal level. Now, from a state level, again, back to your findings, you need to find out they're financially responsible, adequate provision to provide for debt service. But there's a balance on how much you're responsible for. And it's important to remember because of all those disclosures in the documents. From a security standpoint, we call it 10b-5 disclosure. Everybody's responsible for providing disclosure in the documents and to the ultimate investor about the borrower and the credit. And so the deeper any conduit issuer, again, I'm talking globally, not agency specific, the deeper you get into that discussion, the more responsibility you sort of bring on to the conduit issuer itself in making sure that all of those disclosures about the borrower and findings. The securities laws likes to put the underwriter, who will speak next, on the hook for making sure that they are selling the security and making this is a suitable investment for the ultimate purchaser. So that I think is also an important item to keep note. And the last thing, because I want Brian to be able to speak, North Carolina Medical Care Commission, another agency within North Carolina, also issues debt on behalf of acute care hospitals and with senior living. I work in senior living, as Jennifer knows, and I work in charter schools. And there are some similarities. They're very nuanced by way of their operations and how they get their revenues. They're different, but many are non-investment grade. It's just the nature of the beast of those kind of organizations by way of their revenues and expenses. And so it is important to note, talk to the commission. They do allow non-investment grade issuances to come through the commission. So you have a sister agency that is has looked at the same issue. But with that, I would like to make sure Brian has time for the floor.
Absolutely. So our third speaker is Brian Kelso, and he's the Managing Director of Baird Public Finance. So he will be speaking in terms of the market and what is out there that the issuers can expect, as well as an underwriter background.
Great, thank you. And yeah, thanks, Dave, and thanks, Lisa. Brian Kelso with Baird. Baird is a bond underwriting firm nationally in North Carolina, focusing on all kinds of credits. I'm part of a firm that specializes in charter schools. We have the pleasure and the opportunity to work with charter schools coast. We've been in the charter school space since about 2003. We've completed over 11 billion of bond underwriting for charter schools in that time frame, about 350 financings. So we do have a lot of experience in the space, and that would include both a mixture of investment grade schools, non-investment grade charter schools, and non-rated charter schools. So we do get to work and see with all of those. So we're happy to sort of talk about that context as it relates to this conversation. We do have experience in North Carolina as well. We've completed 4 financings for about 170 million for charter schools over the last few years, and are currently engaged in a similar number of schools and some other prospective clients in the state. So very active in North Carolina. Both in municipal underwriting. I have some colleagues that do that, but me specifically in the charter school space. I'm based in Denver, Colorado, and literally work with schools in North Carolina and in New York City and California and everywhere in between. So in terms of the national issuer conversation, I'm happy to answer any questions because we do get experience working with a lot of them in a lot of different markets. I was asked to just provide some context for the charter school market more broadly as it relates to this conversation, but there are 46 states in Washington, D.C. that have the authority or the creation of charter schools. About 35 of those jurisdictions or states have seen charter schools issue bonds to date. Bond issuance for charter schools, bond financing dates back to the 1990s timeframe, is when this nuanced market really started getting up and going. And since that time, there have been over 51 billion of charter school bonds issued nationwide. And that doesn't include other types of financing vehicles like bank loans, for example, just talking about the bond market. There's currently about 37 billion of charter school bonds that are outstanding. And of all the outstanding bonds, the 37 that I referenced, nearly 70% of those charter school bonds are either below investment grade. So I know the treasurer mentioned this double B category. That's what I'm referring to, or non-rated. So I think that just speaks to the reality for charter schools that only the highest credit quality charter school entities are able to reach that investment grade threshold. And that's just inherent in their revenue sources that were referred to, the reality that they have to go through charter renewal and potential revocation risks, and how the rating agencies view that in their criteria relative to other governmental entities that may have something like a taxing authority that the charter school does not. Charter schools for bonds have, given the breadth of the market I just discussed, it's become a pretty large and known asset class. There's a sizable and growing group of investors that look at these particularly, let's say, non-investment grade charter school bonds. We, Baird, as an underwriter, work with 40 to 50 bond investors that look at charter schools regularly. That seems to be growing every single year as the market gets more and more comfortable with them. And there's some others that kind of come and go more periodically, but certainly 40 to 50 are what I consider sort of a core group of investors that look at the charter school space. Again, particularly focused on non-investment grade. All of those investors are either qualified institutional buyers or accredited investors, which are defined terms, which in essence just speak to the nature of their sophistication to be looking at these types of investments or any investments that might fall below this investment grade category. Some of the more active charter school investors, just to provide some context of the names, these are very large investors in the municipal bond space generally that look at lots of different types of bonds that are issued by governmental and nonprofit entities. And then that's very active in the financial markets broadly in a variety of ways. But Nuveen's a large investor in charter schools, BlackRock, Vanguard, Invesco, just to name a few of the 40 or 50 that I mentioned earlier. I think you all know, but as a charter school, they have to use a conduit issuer. That's why we're speaking to you all. They fit in this sort of unique space of a 501c3 nonprofit. That's the need to have to access the tax-exempt bond market through a conduit issuer, but also somewhat, governmental given their funding sources and their public nature of serving schools as a public school. But that, the 501c3 tax code requires charter schools to use a conduit issuer. And as Lisa mentioned, there are a handful of national issuers that have multi-state jurisdictions. And the Wisconsin Public Finance Authority has been where the majority, but not all of North Carolina charter schools have gone when they've needed an issuer out of state out of necessity. So I think what I really wanted to also make clear, or I think a really important point for this group is, as a North Carolina-based issuer, what the authority can provide that these other out-of-state issuers can't provide, in addition to the comments about oversight and involvement mentioned earlier, is that you can provide to the investors of the bonds a North Carolina state tax exemption that these other multi-state issuers don't have the ability to provide. And in doing so, the so what to that is that investors are willing to accept a lower interest rate because they're investors that are working with their bond funds, for example, where there's North Carolina state specific funds that their investor base would be North Carolina residents. And so that provides them the incentive to accept a lower rate. I think conservatively, because we don't have a lot of test cases for this, really, given the context for issuers up to this point, us and our underwriting desk that works very actively with the investors, we would estimate that interest rate benefit to a charter school of a non-investment grade nature to be at least 15 basis points or 0.15%. It certainly could be more, but that's at least a conservative estimate of what we think investors would be willing to take as a lower rate with the North Carolina state tax exemption. So for one of these schools that, I mean, just to have a round number that's kind of relative to some of these project sizes, a $20 million financing or a project with, a 30-year term, that interest rate difference is probably about $25,000 less per year to the school's annual budget, and $750,000 over a 30-year term. And for a charter school, 25, as Dave can speak to, he's operating, he's involved with them at the coalition. I mean, $25,000 is a lot of money that can be used for, help with teacher salaries, help with classroom expenses, a lot of help build reserves. A lot of ways that money can be used. It's very meaningful to schools. And of course, the larger the financing, the bigger the savings that they would receive from this lower interest rate. I think, bonds versus other bank products and things which charter schools also look at provide, permanent long-term financing, 30+ year amortization, matches the useful asset of the assets that are being financed. And it also, removes any refinance risk for schools, charter schools, and allows them the option to refinance, but not the inherent requirement to refinance. So while we also work on, shorter term or bullet or put bond structures for charter schools, the lion's share of what we have done with most of our clients is long-term permanent financing, given the simplicity and the lack of risk in those types of deals for schools going forward. I think just one couple last things in terms of just charter school default risk and defaults. Of all the bonds outstanding, there's 37 billion I mentioned outstanding currently. There's only 1.5% of the par amount of those nationally that are currently under payment default. Just for some context, for while they range in various ratings and credit quality, payment default risk is relatively low by that measure. And then I think, Lisa, you mentioned this earlier, but yes, doesn't matter who the conduit issuer is. If there's a problem credit for a charter school in North Carolina or anywhere else, the headline risk or the headline aspect goes to where the project is located, where the school is located. So in other words, an out-of-state issuer for a North Carolina charter school doesn't really take North Carolina or the problem of that particular school out of the discussion, should it ever be a headline of a school that's gone into default or is closing. I want to stop. I did have some information about, there are other states providing credit enhancement to charter schools, which isn't really the board's purview, but from a statutory standpoint. But I know we're kind of running up against an hour, so I want to stop in case there's questions, or I'm happy to take that topic.
Yeah, unfortunately, we are actually out of time for the whole meeting. This is a really interesting topic, and I suspect we have innumerable questions that have already bubbled up from different members. So what I'd like to do is see if you guys would be willing to jump on a Zoom maybe at our next meeting to continue this discussion. A little homework, I guess, for you. If we were to think about drawing lines in that 70% of issuance that is not investment grade, respecting the fiscally conservative tradition of this state, where would we draw those lines that they'd be clear and understandable, and what would be the precedence of doing so? And maybe we can jump off in our next discussion with that topic, and then table any other questions from the members until then, since we now have all the local government commission folks in the room. We might end this discussion here if that's okay.
Chair, may I ask one thing for our next meeting as well?
When's the next meeting?
We can have it next month.
We will intend to do that next month. So February.
May I ask that we also have I would consider maybe an unbiased voice. I am very interested to understand the impact of charter schools on more traditional public schools. I have an opinion about that, but I certainly want it to be backed up. I'll do my own research around that and be prepared to speak to my perspective then. But I would like some counsel around that may be unbiased. I think most of the voices that we heard today are probably pro. And I think having some balanced voices on this agency to advise us would be helpful as well.
Mr. Bowers, there are some articles, that show a more cautious side that I think we would benefit from hearing from as well.
Sure. I think we want all voices at this table. I think we want to make sure we respect the remit of the CFFA and that we're ascertaining credit quality, not more broad public policy. But happy to invite anyone you think is constructive to this discussion to part of it. Because I think we want to all have very informed decisions as we contemplate this.
Sure. In the context of thinking about or asking us about the question around below investment grade consideration, I think that broadens the scope for us a little bit.
Sure. No, again, happy to have any other voice at the table. I just want to make sure that we keep it to CFFA matters and not general government matters, because we could be here not just all day, but all month otherwise. Okay, with that, I would like a motion to adjourn until next month, if there is one.
So moved.
Thank you, Ms. Parker. Is there a second?
I'll second.
Thank you. We'll just do a voice vote. All those in favor of adjourning, aye. Aye. Anyone opposed? Thank you. We are adjourned. I appreciate your time. All right, we'll reconvene.